Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
U.S. stocks are looking set to start the day on a mixed note, with expectations of gains for the Dow Jones, while the S&P 500 and Nasdaq face an uncertain start. We're seeing some strong economic data coming out of the U.S., including better-than-expected GDP growth and solid jobless claims numbers. The latest GDP figure has been revised up to 3.8%, a significant boost from the initial estimate of 3.3%. This is largely due to consumer spending and business investment providing a strong base for growth. Now, let's take a closer look at how these developments are impacting the markets. As we can see from the futures data, Dow Jones is expected to rise this morning, with those for the S&P 500 trading slightly higher. However, Nasdaq futures are looking a bit more uncertain. The reason behind this disparity is largely due to traders questioning the timing of future interest rate reductions in light of these economic indicators. The expectation is that interest rates will remain steady, but the data suggests otherwise. This is causing some uncertainty among investors. In fact, stocks fell for a third day in a row on Thursday as better-than-expected GDP data and jobless claims led traders to reassess their expectations. The Nasdaq and S&P 500 both saw declines of around 0.5%, while the Dow experienced a more modest drop of 0.4%. But what's interesting is that European markets are bucking this trend, at least so far. In London, the FTSE 100 is up 0.5%, while Frankfurt's DAX is 0.4% firmer, and the Paris CAC 50 has gained 0.6%. It's almost as if investors are taking a wait-and-see approach to new U.S. tariffs that took effect last week. These tariffs, which target pharmaceuticals, heavy trucks, furniture, and kitchen cabinets, were seen as having a negative impact on Asian markets. Tokyo's Nikkei fell 0.9% due to the impact of new regulations on pharmaceutical manufacturers, while Hong Kong's Hang Seng shed 1.4%. In contrast, Sydney's ASX 200 closed up 0.2%. So what does this mean for the future? Well, it seems that investors are taking a more cautious approach in light of these economic indicators and U.S. interest rate decisions. But will they be able to shake off the uncertainty caused by new tariffs? Only time will tell, but one thing's for sure: markets are always unpredictable. As we'll see on Voro, the world of finance can be complex and ever-changing. We'll continue to bring you the latest news and analysis as it happens.